Hi, Mike Beal from Mike Beal Financial Planning here. Welcome to my first ever video newsletter. Happy New Year for 2025. And my newsletter today is going to have my outlook for 2025. In particular, caution for 2025. And what this really relates to, in my view, is the risk around the US stock market at the moment, because the US stock market makes up 75% of something called the Morgan Stanley Capital Index. That means most super funds in Australia are going to invest about 75% of their overseas assets in US shares. So what that's going to mean, if there is a correction or crash in the US stock market, they're going to be quite badly affected. Why do I think the US stock market is overvalued? Three main reasons. One is Warren Buffett, who you might have heard of, one of the most successful investors the world's ever known. Currently, Warren Buffett's fund, Berkshire Hathaway, is sitting on over $300 billion in cash. I think this is indicative of he wants that cash available in case there's a correction. He wants to have that money available for bargains, so that's why he's got a record haul of cash. Also included in that is the Buffett indicator, which measures GDP versus the size of the stock market. They should be roughly even. Buffett calls it the best single indicator for how cheap or expensive the market is, and at the moment that's as expensive as it's ever been. Number two is something called the Shiller-Cape PE ratio. Robert Shiller being a Nobel Prize winning economist. Now that has been going for the past 150 years, goes back in history 150 years, and this is the second highest reading over that 150 years. The only other one we've had higher was just before the tech wreck in the early 2000s. The third reason would be the US government debt, now sitting at $34 trillion. And you can see from this graph here how much the interest is going up in America. So whilst the US dollar has been climbing recently, if people start to lose confidence in the US dollar, it could start to devalue, and that would be another negative impact for US shares. So how to protect yourself in this environment? One is to simply avoid the US stock market right now when it's so expensive. There's lots of other markets around that we can find quite good valuations in. And number two is to diversify as much as possible. So that means buying cash, bonds, property, shares, and alternative assets such as gold, investments that correlate differently from traditional asset classes. And number three is to seek advice from someone like me, Mike Beal Financial Planning. And so yes, that's my first video newsletter I've done. So I wish you all the best for 2025, and feel free to touch base with us. Thank you.